is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Andrew, a lot of interesting stuff going on in the market over the last week, which we will dig into what it means for prices and for price action going forward. But first, I want to talk about this big funding round that we saw for this project called MONAD. And it's notable because over the last little while, we've started to see VC funding start to pick up, but also bigger and bigger rounds into blockchain Web3 projects, which I think is a good sign for the health of the market, that things are coming back, that people are deploying capital, but also that there's still innovation happening at the technology level. I confess I didn't know a lot about this one, so why don't you help us understand what's going on here? Why is it that this project was able to raise over $200 million, which let's be honest, like that's a big round. Love to get your take on it.
Yeah, so MONAD, exactly like you said, just raised a $225 million round. I believe it was led by Paradigm, which is, if not the top, one of the top sort of crypto funds in the whole space. So MONAD has probably been the most hyped up sort of blockchain crypto project in the last 3 months. It's kind of come out of nowhere, I would say. Since then. And essentially in like 2 words, essentially what it is Solana EVM. I mean, that's kind of sort of minimizing it to a certain extent, but it effectively is its own L1 that's fully EVM compatible. So, all the DeFi projects, everything that's built on EVM, which is the vast majority of sort of blockchain apps today. But then it has the sort of scalability of Solana. So I believe it's like 10,000 TPS transactions per second, and like fractions of a penny for transaction costs. It's kind of like the estimated at launch. I believe launch is expected in September, October. So the chain's not live yet. This was essentially a private sale. I believe it actually doesn't clarify, but likely some sort of combination of equity in MONAD Labs, as well as the MONAD token itself. Again, don't quote me on MONAD Labs. I'm not sure if that's actually the name behind the dev code behind it. But so MONAD is actually one of the most exciting projects in the whole space, I think, right now. At least personally, for myself, which is I'm an application developer in the space. Because for a lot of like application developers like myself, we have been watching Solana kind of blow up over the last 6 months, 12 months, and essentially become like the de facto home of crypto consumer apps, as well as meme coin trading, just pretty much everything when it comes to consumer usage. And the reason why is because it's so much more scalable than Ethereum, even in most of the L2s as well, actually, that you can do a lot of really cool things with it. So, for example, you can run fully on-chain order books on Solana. It's actually viable to do that, which is something that you can't even come close to doing on Ethereum mainnet. And for the most part, it would be tough to do it on most L2s. You can kind of do it if you run your own Tendermint chain. So there's some projects like Hyperliquid, which is at this point the number one order DEX, which is actually running an on-chain order book, again using their own Cosmos chain. But for the most part, that's just one of the many things you can do on Solana that you can't really do in the EVM world. Mostly because just up until now, there's not been like a hyper scalable EVM chain that you can deploy on. And
so let's just for the benefit of the folks who are maybe not as crypto native as you are. So EVM is Ethereum virtual machine. So basically that means Ethereum compatible, right? So we talk a lot about like layer 1s, layer 2s, other sort of networks like Avalanche. These are networks that are EVM compatible, meaning that they use the same programming language, but also that the liquidity is composable, right? Like the idea is like you can build one thing, you can easily build on the other, and then assets can move between those different platforms very easily, right? So it's sort of like this might be a crazy analogy I just came up with, but it's like a trading block. It's like the European Union, where like Ethereum is Germany, and then all these little rinky-dink European countries are layer twos and EVM-compatible chains, right? But it's all one common currency and common trading block, right?
You can also think of it like Android versus iOS.
Yeah.
Apple. So that's like another way, or like but yes, you can think of it like that too.
Okay, go on.
No. That like the main thing really is just like if you're within the EVM world, if you build your app for one EVM chain, there's obviously a lot of other factors that go into it, but for the most part, you can deploy on other EVM chains relatively easily. So the big issue right now is the vast majority of EVM apps built on EVM chains aren't actually deployed on Solana. There's like this huge schism between the two. They're like almost entirely separate communities. And so the beauty of MONAD and the reason why it's so exciting is it's essentially bringing like a parallel, monolithic style scalability for EVM chains, for chains to EVM. So you can build all sorts of new consumer use cases that you wouldn't have been able to build historically unless you kind of either ran your own roll up or ran your own app chain. It's super exciting. I've actually spoken to the MONAD team a couple of times. I think that it's one of the best sort of dev teams, as well as marketing teams actually, in the whole space. For example, they brought this. I think their head of growth is this guy on Twitter called Intern, who's like, very very famous in the crypto Twitter circles. So it's got kind of the right mix of dev talent, marketing talent, very hyped up community, and then obviously what I think is sort of bleeding edge tech. It's gonna be really exciting. It's probably going to be the biggest new L1 to launch this year. That and maybe Bearchain, which is kind of coming out hopefully in the next couple. We're not really sure, but in the next couple of months. So I think, and Bearchain is also kind of interesting, just to kind of talk a bit about Bearchain because it solves another issue, which is for the most part, Cosmos SDK chains like your own, those are also not EVM compatible, and so Bearchain is essentially launching the first EVM compatible Cosmos SDK chain as well.
Oh, that's interesting.
They're building this thing called Polaris, which will be like an open source SDK for launching your own EVM compatible chain. So I think that's actually going to be a huge catalyst for Cosmos, for example. I believe Bearchain is going to be hooking into the IBC as well. So there's definitely some, it's going to be good for Cosmos. But I think, I guess what I'm trying to say is MONAD is kind of like, could be the Solana killer. I mean, I think that's kind of a stupid term, but it's definitely bringing kind of like Solana level scalability to the EVM world. So,
it's interesting. Certainly something that the industry could use more of. It's like Solana killer, Ethereum killer, all this stuff. Like Solana was the Ethereum killer, but like today, both of them are within 25% of their all-time highs.
Yeah.
And if I would guess that both will be, as big as they ever have been sometime in the next 6 months, right? So I feel like we're early enough in all of this that the idea that one kills another is such a zero-sum way of thinking about an industry that's really growing so much. This conversation reminds me a little bit of our chat with the Electric Capital guys from a couple of weeks ago. For those who maybe missed that episode, strongly encourage you to go back and check it out. These guys are, they've been in this space for a very long time, and they've been running serious money investing into early stage Web3 opportunities with a real engineering focus. And they were talking a little bit about how a lot of these different blockchain networks seem like little countries, little nation states with their own sort of internal economies and sets of rules and so forth. And the comment I made back then is the comment I still have today, which is, doesn't that seem kind of to defeat the purpose in a way of this technology? Because the complaint about the current system is that it's highly fragmented. There's different technologies. There are trade barriers, which are both, business, but also regulatory and so forth. And maybe blockchains can help to flatten the world out, increase liquidity, composability, access, choice, and so forth. All that stuff, right? Like those are some of the themes that we talk about a lot. And all of this carving up of the ecosystem seems somewhat self-defeating. And it seems to me like, help me square this thought I have with projects like Bearchain and Monad. It almost seems like, as you're describing it, both of them could make the whole space more composable and more liquid. I mean, if I don't understand how Bearchain works, but if it's a way to bridge the Ethereum network to Cosmos so that you can move assets between these different networks or whatever, then that seems like a useful thing that will benefit both ecosystems because it brings them together, right? And maybe Monad does something similar by making the Ethereum network, which is already where most stuff happens, even notwithstanding meme coins and other Solana applications, makes that whole ecosystem more useful too. Like, what's your perspective on that?
Yeah, it's interesting. I mean, it's tough to say really because, I mean, they are going to be, like, on one hand, they are going to be competing, I guess, for the scarce resource of developers and users. And Monad and Bearchain, they're not L2s, like they're fully their own L1. So what that means is like they have their own validator network, their own sort of security model. They don't pass value back directly in any way to Ethereum the way that an L2 does. Because L2s like essentially tether their security to Ethereum, so they have to settle. They have to like batch transactions. So like in one sense they are different, though. What's interesting though is at the end of the day, like everyone bridges into Ethereum. So even though they're, I guess, competing in a different way, like at the end of the day, like they're still going to be, they're still, their main flow of capital into their ecosystem will be almost certainly bridging from Ethereum into their ecosystem. And so in a way, I guess it does bring some value to Ethereum. I guess just from transactions from going in and out of different networks. I do think I'm coming around more and more to this idea that like Ethereum is kind of like almost like the Fedwire chain. It's like it's going to be where all the super high value transactions will reside, and consumer apps will likely live on either their own kind of L2 or more likely L3, or on their own sort of app chain, most likely, which will be built Cosmos SDK, or it'll live on like a monolithic consumer app chain like Monad or Solana. I think those are kind of like the three homes of where these crypto consumer apps will live, and for the most part, there'll almost be no DeFi protocols, I think, on Ethereum long term. So I think like Ethereum is really going to be where ultra high value transactions sort of reside.
Right.
And then kind of like, L2s will be like where medium transactions reside, and then L3s and the super high TPS chains will be where consumer apps reside. Because like at the end of the day, like with these extremely high TPS chains, like you're pushing so many transactions through them, like it has a lot of trouble. You've seen outages, things like that, and so like and with app chains, there's obviously less security because you're relying on a separate validator set. L3s to a certain extent have lesser security than L2s, and obviously mainnet. So like, I guess what I'm trying to say is like different ecosystems will house different applications.
Mm-hmm.
I mean, that seems obviously pretty obvious right now, but I think the market still sort of sees like Solana taking away from Ethereum, whereas to me they're very much different things at this point.
Yeah, I like that. I think that's really interesting.
But I don't know. Have you, sort of speaking on Solana, by the way, I don't know, did you see the FTX sold out a huge chunk of their SOL position on their balance sheet?
Yeah, $64. So the token right now is $175. And I know that there's a hold period. I think it's at best over like many years. I don't know, Andrew. Like if someone said to you today, shares of Google are $150 and you got to hold them for 4 years, what is the discount that you would require to buy them? I would probably buy them at 125, 130, because I think that's, I can use valuation. Like a lot can change and Google might fall behind and the business could suffer and the markets could change. And I would need some acceptable discount of maybe 25% or something. Maybe that's not savvy thinking, but the discount was quite steep. And it's like a very crypto discount. It's like the market says the thing is worth $200 as of last week. So we're going to price it at a 70% discount or 65% discount. Mind you, the thing was it's $9 2 years ago, or, a year and a half ago. So I don't know. It's a funny thing. I don't really have a view on this other than it seems like FTX creditors are definitely going to be made whole and then some in dollar terms, maybe not in crypto terms, because like they're going to reap a serious reward from this. Yeah, I don't have a view. It's just the discount was the only thing that stood out to me. It's like, yeah, it seemed like a steep discount. If someone's like, hey, you can buy gold at $700 an ounce instead of $2,300 an ounce, you'd be like, holy moly. I don't know. It just, I don't know. Do you have a view?
Yeah, it's kind of crazy. I think it doesn't really pass the smell test, I guess, in terms of like the headline number of 64%. And I think part of the reason why
$64.
Sorry, $64.
$64. But the question is like whatever your reference point is. So it's like a 60-70% discount.
Yeah, I thought it was a 60. I thought it was like a 65-70%. Okay, yeah. So it is like a 2/3 discount, roughly.
Yeah.
I think part of the reason why it seems crazy is because Solana is not like some dying project with not a lot of liquidity. It's like the fastest growing, best performing crypto asset in the whole world over the last 12 months. At least within like the top 20 of crypto, like within the blue chip, we call it blue chip of crypto. So it just seems crazy that for an asset like Sol, I understand it's obviously super volatile though. It just doesn't feel right given how well it's been doing and how much it's clearly established itself as kind of like the clear number, like in my head, the clear number 3 to Bitcoin and ETH. So I don't know. It just seems bad, but if you think about it though, like if you do like funny enough, actually, I think Galaxy, who was one of the big buyers of Sol in this round, they just did a bought deal. They just announced it today. I think they did it at like a 20-25% discount to their market price.
There's a 12.5% discount, but it's presently trading down even more. It's presently trading down 18.9%, which they, probably negotiated this. Having done one of these a few times in my life, from the other side of the street, they probably negotiated this last night, agreed to terms, and then this morning, crypto's down, and that's just like the nature of the game. It's funny. It's kind of like pricing a deal in the commodity complex. It's like it's like you price a deal when oil's at 85 and then it goes to 81, and all of a sudden, all your peers open down 5%, and your discount doesn't look so generous. So anyway, that's just a take on that one. Go ahead.
Yeah, no, and I don't know what I think I'm not sure if it's a 3-month hold or a 6-month hold, but obviously Galaxy is also, I think, relatively less volatile than Sol as a crypto token. Just because
it's actually no hold. It's a 3-day. It settles T+3 the deal. So,
okay, so in that respect, it does make some sense then, right? Because it's like Galaxy. I mean, I haven't looked at the relative vol, but I have to assume Galaxy is a less volatile asset than Solana, just given the fact that Solana is just like hyper volatile, obviously. Yeah. So like if you think about it, like a 12.5% discount on 3 days. Yeah. I mean, this is 4 years.
I know.
on a more volatile asset. And we don't know if it was exactly a 65% discount. It might have just been 65% in the sense that like souls obviously continue to go up. So like,
Andrew,
I think
if I give you the option today to buy Ethereum and you couldn't sell a single token for 4 years, what price would you quote me at?
I feel like the market would be like 2,500.
That seems about right.
So about 35% discount.
Yeah.
Maybe more though. I don't know. Like me personally, I would love to buy ETH at 2,000 or 2,500.
Yeah.
I mean,
Just an interesting. It's just a litmus test, right? And just you can compare it to other kinds of assets, whatever. So yeah, I don't know. It's just fascinating. There was another interesting transaction that has happened, also sort of in the similar vein, which is that Genesis got permission to liquidate its GBTC holdings, and according to news reports, used the proceeds to buy Bitcoin. And the purpose of that was to satisfy creditors of Gemini Earn, which is the project that Genesis was involved with during the last cycle. And we're going to sharpen our pencils over here at 9 Point on the Digital Currency Group, which is the parent company of Genesis and also Grayscale, and also Foundry, the biggest mining pool in the world for Bitcoin, and also a holder of dozens of positions across the ecosystem in some of the biggest and most successful projects. I think people become really fixated on Genesis and what it means for DCG, the fact that they have these outstanding debts and that they're the subject of scrutiny and so forth. But like, in my opinion, there's an asset there with DCG that could be enormously valuable. And I'm just musing at this point because last week, remember, we talked a little bit about Base and what it means for Coinbase and the idea that, how do you value the upside from Web3 native projects and crypto assets inside of corporations, right? This is a related theme, which is how do you value all these disparate investments and more traditional kinds of businesses like Grayscale, which is just an asset manager inside of this corporation. I'd love to understand that a bit better. And I think we're going to do that. We're going to try and dig into that because, I think that DCG could be this kind of huge unrealized thing. And I'm not sure how they plan on realizing it or what their strategy is around that. And there's a zillion different things they could do. They could spin off different divisions as a way to unlock capital. They could list the whole vehicle as a public company. They could, do lots of different things. So I'm really interested in it. Just an observation based on this news that, perhaps with this sale of GBTC, they're inching closer towards being free from the burden of Genesis and what it sort of ensnared the rest of the business. And they've got an opportunity to, keep building from here. So something just to think about. And maybe we'll report back. Maybe we can bring someone on from DCG soon to the show. Yeah,
for sure. One thing that was also kind of interesting, did you see the sort of release came out that Genesis was actually at one point in talks to actually merge with Gemini and then bring both companies, like the combined co public. That's kind of like one of the way outs of this like bankruptcy that they're going through. Not sure if you saw that, but I thought that was pretty interesting.
Nope, I didn't. That's really interesting. When was that, recently or?
Yeah, I'm just looking up right now actually. So the Gemini, it was like a obviously no merger happened, but while they're sort of trying to figure out what to do, sort of because Genesis owed Gemini a ton of money. One of the ideas, I think this was kind of like back in January last year. Mm-hmm. They were actually DCG boss Barry Silbert actually proposed a sort of last ditch like merger with Gemini, this was actually in fall of 2022, And the idea was that they would.
I feel like since then things have really fallen out between those groups.
Yeah, no. Obviously, this did happen before the bankruptcy filing in January of last year.
Right.
But the idea was that they would, the combined co would be obviously like a behemoth, and it would raise like a $500 million round, and then take the company public. Not great timing because fall of 2022 was like peak depression of crypto, but it's just kind of interesting. It was interesting to see that because obviously it's become quite acrimonious between the two companies in sort of the following 12 months. So,
no kidding. Yeah. Well, it's all very interesting. I think the move earlier in the week in the market, people felt was maybe a response to, hey, maybe Genesis is all cleaned up and now they're now they're bidding for Bitcoin, and so all to the moon. And we got Bitcoin up to 72 and change, but it's taken a bit of a diversion here on our way into the halving. Halving? Are we now saying halving, not happening? I remember in the old days we said happening, but anyway, I guess that'll be next week's show. I mean, it's kind of inevitable, right? Because it'll be days away when we finally record. So we'll see where the market stands at that point in time. Anything else this week, Andrew?
No, I think that's really it. I mean, I think definitely next week is a Bitcoin halving episode. We can kind of go through the history of the price performance of before and after halvings, and
sure,
get some good stuff. It does seem like I know from last week we were talking about kind of like the peak in meme coins and stuff like that. It does seem like meme coins have definitely taken a pause. The majority of the ones that I've been sort of tracking have been off their highs, with the notable exception of Joe Biden. It continues to make new highs, which is like a meme coin of Joe Biden. But for the most part, everything else has either paused or starting to go down a bit. And part of that also is Solana is dealing with like huge amounts of traffic right now in transactions. I was seeing something that like roughly 85% of transactions fail when you use Solana right now. So you have to just constantly retry. And so the UX
that doesn't sound pretty useful.
Yeah, just keep retrying.
I can just imagine like trying to build a position in a stock and being like, oh, every time I buy this stock, it fails because the network is overloaded. It's like
we are still very early.
Sometimes I wonder about these things. Anyway, to be continued until next week. That was a good chat. I think next week we actually have a guest for the show. I'm going to have to double check with our booking agent, aka Jake Moody, the associate here at 9 Point, about who that person is. Jake, are you on the call? Can you tell us who we have for next week?
Yeah, so for next week, we're going to have a guest that is joining in from Consensus, Daniel. I believe that you spoke to him about 2 weeks ago. So we secured him on the podcast.
Oh, this is actually super duper exciting. This is Daniel's head of partnerships and institutional for MetaMask Institutional. So basically MetaMask is like the leading, wallet application that's used by everyday traders, but they are building out institutional and portfolio management and all sorts of other capabilities for fund managers, family offices, corporations, like you name it. This is going to be a really, really interesting conversation. We'll still squeeze in some happening chat, but yeah, this is going to be a really great chat. So please, join us next week for that conversation. That is it for this week's episode of DeFi Decoded. Until next week, good luck out there, everyone. We'll chat soon. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.